Let me tell you a story about one of the most preventable senior crises I've ever seen. A family in Pleasanton reached out to me after discovering their mother had 4 months of unpaid bills, two overdraft fees, and a stack of late notices hidden under a placemat on the dining table. Their mom wasn't irresponsible, she simply wasn't keeping up anymore. Mail piled up, auto pay accounts didn't match the bank balance, Medicare statements went unread. The adult children were stunned. They thought they were handling everything, but no one was managing the financial day to day. When they finally brought in a daily money manager, everything changed. Within weeks, bills were automated, insurance claims were organized, bank accounts were monitored for fraud, spending patterns were tracked, stress vanished. The adult children finally slept at night. That's the part families never talk about. Daily financial chaos is often the first sign a parent needs help and the last thing adult children feel prepared to manage. And that's why today's episode is so important. Hi, everyone. I'm Corpus, a senior transition specialist and real estate expert based in the San Francisco Bay Area, and a proud member of the Sandwich Generation. This is Sandwich Generation Solutions, powered by the Simplify Senior Transitions podcast. Today's episode exposes one of the most overlooked professionals in senior care, the daily money manager, and why they can prevent financial disasters long before families realize help is needed. Let's dive in. Let's talk about first what a daily money manager actually is. Most people have never heard of a daily money manager. They are not financial advisors, they are not accountants, they are not estate planners. A daily money manager is the person who handles the financial tasks of everyday life, such as paying bills on time, organizing mail, monitoring accounts for fraud, managing subscriptions, reconciling bank statements, filing medical claims, tracking expenses, helping seniors avoid scams, preventing financial exploitation, and preparing documents for tax season. In other words, they protect your parents' finances from slipping through the cracks. They reduce stress for both the parent and the adult children. They catch problems before they become urgencies. And yes, this is a real profession, and it's growing. So here's why seniors need this more than ever. Here's what I see every week as a senior transition specialist. 1, mail piles up. It becomes overwhelming, even scary. 2, memory lapses lead to missed payments, especially for utilities, insurance, and mortgage accounts. 3, online banking is confusing. Passwords, two-factor authentication, confusing interfaces. 4, seniors become major targets for scams. Phone scams, charity scams, subscription traps, IRS calls. 5, auto pay issues cause overdrafting, and banks are not forgiving. 6, families assume someone else is handling things. Spoiler alert, usually no one is. A daily money manager steps in before these issues create long-term damage. You're probably wondering what a daily money manager actually does week to week. Let's go over it. 1, ensures bills are paid on time, no more late fees, no power shutoffs, no lapsed policies. 2, help seniors read and understand mail. Insurance statements, Medicare notices, benefit letters, they all get organized. 3, prevents fraud and scams. Daily money managers are trained to spot red flags. 4, coordinates with other professionals. They communicate with CPAs, attorneys, fiduciaries, and even caregivers. 5, helps with budgeting and tracking spending. Super important when planning for senior living or caregiving expenses. 6, prepares for tax season. No more scrambling to find documents. 7, supports seniors with cognitive decline. A money manager often spots early dementia before the family does because finances are usually the first area affected. Here's the number one mistake families make. Most families wait until something goes wrong. Utility shut off, bank accounts accidentally drained, scammer steals money, insurance policies lapse, debt collectors start calling, A crisis exposes years of financial mismanagement. By the time they reach out for help, it's a mess. But the truth is this: daily money managers are most effective when brought in early, long before the crisis. Think of them like preventative healthcare, but for your parents' financial life. Let's look at another real life scenario based on families I've worked with. We'll call them the Bennett family. The Bennett siblings from Alameda County were juggling jobs, kids, and weekly drives to check on their dad. They thought they were doing great until they discovered 3 unpaid property tax bills, a canceled long-term care insurance policy, a scam subscription worth $89 a month, 2 missing medical reimbursements worth $1,200, a credit card payment overdue by 45 days. They were overwhelmed and embarrassed. Their dad was stressed and confused. They hired a daily money manager for 4 hours a month, and suddenly, bills were automated, scams were identified and canceled, taxes were handled, insurance was reinstated, finances stabilized, and the family stopped arguing about who was supposed to do what. This happens all the time. So when should you bring one in? Here are the signs. Your parents' mail is piling up, bills are paid late, strange charges appear on their bank statements, they stop understanding their insurance, they're overwhelmed by Medicare. They don't remember passwords, they're giving money to charities they don't recognize, they get emotional when talking about money, they say, "I'm fine, but nothing is actually getting done." You're the adult child doing everything and burning out. If any of these resonate, it's time. Now let's talk about costs and how it works. Daily money managers usually charge $75 to $150 an hour in California, or a monthly retainer for ongoing help, and compare it to the cost of fraud, missed bills, financial abuse, legal consequences, and lost insurance benefits. It's one of the best investments you can make. Many fiduciaries, estate attorneys, and even CPAs refer to daily money managers regularly. And lastly, let's cover how they fit into senior transitions. This is where I see the biggest impact. Daily money managers help with preparing finances for senior living, gathering documents for Medi-Cal or benefits, stabilizing accounts before selling the home, tracking expenses for tax purposes, helping fiduciaries with record keeping, and preventing financial confusion during a move. If your parent is transitioning into assisted living, memory care, or even downsizing, a money manager can make the process 10 times smoother. Let's do a recap. Today we covered what daily money managers actually do, why they're so important for seniors, how they prevent financial disasters, when to hire one, and how they support senior transitions. They are the unsung heroes of financial safety for older adults. And if your family is overwhelmed, the solution might not be more caregiving. It might be better money management. This has been another episode of Sandwich Generation Solutions powered by the Simplify Senior Transitions podcast. If your loved one is considering senior living and you need to figure out what to do with their home, let's talk. Schedule a free consultation and learn more about my services at www.simplifyseniortransitions.com. Or you can reach me anytime on Instagram at SoldByDale. If this episode helped you or taught you something new, please like, subscribe, and share it so that more families will know about this resource. I'm Dale Corpus, and I'll see you on the next episode.